Hey guys, I'm Dave Stearns. In today's video, we're going to discuss risk tolerance and what can be considered safer investments for those who are retired or nearing retirement. Let's begin by talking about risk tolerance. You know, when it comes to investing, risk tolerance is one of the most important ingredients in creating a retirement plan that's right for you. So what exactly is risk tolerance? Basically, it's an assessment of how much risk you can tolerate. In terms of investing, risk tolerance relates to your ability to withstand losses. So if you're investing for growth in the stock market, for instance, how much of a market decline can you handle before you panic or your quality of life is affected? Knowing your risk tolerance is especially important in deciding how aggressive or conservative you want your portfolio to be. If you're in your 30s or 40s, you might be willing to take more risk than you would naturally be comfortable with. If you're in your mid-60s, you might take less risk than you instinctively want to, depending on your retirement timeline. If you're 60 and plan to retire in 5 years, you might want to start getting more conservative now. If you're 60 and don't plan to retire for another 10 years, you might want to remain more aggressive for a while. Another factor is the size of your nest egg. I mean, think about it. If you've got $4 million saved, you'll probably feel you can afford to take more risk than someone who has less than $1 million saved. Finally, of course, your risk tolerance is also determined by your individual retirement goals. Before I get to that, let's talk about the different levels of risk tolerance and really how they pertain to generating income. If your natural risk tolerance is high, you're probably more likely to invest aggressively. Therefore, you would be said to have an aggressive risk tolerance, and your investments might be mostly comprised of growth-based investments like individual stocks and stock mutual funds. But next, there's the moderate risk tolerance level. You know, that's someone willing to take some risk of principal loss, but with a strategy aimed at curbing their risk to some degree. For someone with a moderate risk tolerance, their investment portfolio might be comprised of corporate bonds, indexed annuities, preferred stock, and real estate investment trusts. And then finally, there is the conservative risk tolerance level. If that's you, it means you want as little volatility and risk of loss as possible. For investors looking to remain conservative, investment options include things like CDs, government bonds, municipal bonds, and fixed annuities. As for how all this relates to investing for income, here's how. The conservative and moderate options on the right and in the middle make up the universe of non-common stock income generating investment tools. The aggressive options on the left are mostly growth-based, but with some income-generating opportunities. Altogether, they illustrate just how diverse and varied an income portfolio can be, and how an income specialist can help you create a portfolio geared toward your goals and geared right for your risk tolerance. Investing without considering risk tolerance is like driving a car blindfolded. Odds are you'll eventually regret it. Let's say you're naturally wired to invest aggressively. Now let's say you keep doing that without considering any of the other factors that should help determine your financial risk tolerance. There's a strong chance that by the time you're retired, you'll learn a hard lesson about just how important those other factors are. On the other hand, let's say you're naturally risk averse. So you follow that instinct and always invest conservatively without considering your age, timeline, goals, and so forth. In that case, you could miss out on opportunities to boost your retirement income and achieve your goals more effectively. But the consequences of not understanding risk tolerance aren't just financial. If your allocation is wrong for your risk tolerance, your retirement can be marred by constant stress. You'll always be worried your money is at risk or that it's not working for you as well as it could be. The good news is that once you do have a strategy with the risk tolerance for your situation, you can eliminate that stress. Determining your risk tolerance at different stages of life is more than just knowing how much you do or don't like taking risk. It's about considering your age, timeline, savings, and really most importantly, your specific retirement goals. It's all about understanding that risk tolerance changes and that it's important to revisit your strategy on a regular basis. Finally, it's important to know that the universe of income-generating financial investments includes strategies right for every risk tolerance level and every situation, including yours. I hope that today's video helped you gain a better understanding of the types of investments that are considered to be safer for those who are retired or nearing retirement. Hey, if you enjoyed this video, please make sure to subscribe to our channel so you can be notified when we post new videos. And if you have any retirement-related questions that you would like answered, hey, please don't hesitate to visit StearnsRetirementGroup.com. That's Stearns, STEARNS, StearnsRetirementGroup.com to schedule a complimentary, no obligation consultation to help ensure you've done all you can to enjoy the retirement you've always envisioned. Thank you.